Hello, everybody. My name's Tony Cardenas, and this is the Indianapolis Real Estate Market Weekly Update. Today, I'm sitting here with Kyle Morse with FC Tucker, Shelly Walters with EXP, and Greg Evans with PRMG Mortgage. We're going to be talking about mortgage rates, stats, what's going on in the city, what's going on with the listings. Kyle, let's kick it off with you. Tell me what's happening in the market.
With the market in general, it's kind of interesting. We were talking about before the show a little bit. I think the past, when you see a trend 1 week, it's really hard to say what's going on. But I think we've seen it now for about 3 weeks. And we're trying to figure out how to quantify this because, people are like, hey, the market's going to change. And it's not a light switch, right? We just see a softening of the market, where more listings are coming on the market. And then at the same time, buyers have become a little bit more discerning, right? And so, Shelly and I were talking, the panic has turned to patience. Now, I think still, we would all agree with certain houses. I mean, it's going to be, a circus, right? There's going to be a ton of people. But I think as long as you know what you're getting into with the market, I think this is actually the ideal time to be both a buyer and a seller, right? Because you're going to get a lot for your money. And then as a buyer, there's more coming on the market. And you can be a little bit more patient because on average, houses are on the market a couple more days, so you have a little bit more time. But I mean, if it's one of those, special homes, it's going to be gone in a heartbeat still. But we can't determine everything off of the rarity, right? We have to go off of the norm. So absolutely.
And Shelly, tell us where you stand on this subject right now.
Well, I agree in regards to the inventory is picking up, which is very interesting. I did look back at the inventory from April compared to May, so we are seeing a big influx. And I also last week was out with COVID for a week, so I was kind of triaging my emails, and I was saving. I always have a search going for the different towns, and it was kind of interesting. I felt peppered by Carmel listings coming on the market all of a sudden last week, and I thought, wow, they're really starting to hit. So looking at those kind of stats, I know that the sellers, think it's a seller's market. It definitely still is, but we are seeing inventory increase in areas that were normally just, selling really quickly. So if we look at their stats, total listed in Carmel this past 7 days was 70.
Wow.
And 40 of them have pended. So there's still 30, though, active after 7 days. And that was an average in April was about 46 were hitting the market every week. Mm-hmm. And now we have 70. So that we're seeing an uptick, which, again, do we look back at it as a seasonal issue because it is May and it's time to start listing homes? Or is it really loosening up? And I do think it seems to be loosening up.
Last week was 63, right? So, I mean, it's starting to get
I think
consistent.
the market's definitely loosening up, even with the interest rates being high. Shelly, are those stats as of today?
Yeah, and just between the prices too, it was $215,000 up to $1.8 million was the list price. For Westfield, same thing. They had 47 homes were listed, and back in April, the average was around 32 a week, and pending of 24. So 23 of those are still active. So with both of those towns, you'll see that 50% are still available. And like you said, I love the patience versus what'd you say?
We've gone from panic to patience.
Panic versus patience.
Absolutely.
I love that because I think buyers are a little bit more patient. They're more discerning. They have more money on the table in regards to having interest rates going up on them. So I think everything's just kind of slowly getting a little calmer, if we could say that, just a little bit. In Zionsville, total listed were 19. 11 of those are pended, so 8 are still available as well.
Zionsville's on fire.
Yeah, compared to the past months, we've looked at more like 6 and 7 being listed. So Zionsville's picking up a little bit, but they still could have a lot more. So I just do think it's just changing, as we have been saying in the past couple of weeks. We're seeing a different shift, yes.
Well, Shelly, you being down with being a little ill last week, you sold a lot of homes last week. How many did you get? How many did you do?
Well, I wanted to say a shout out to my team because if I didn't have my team, they were wonderful for the whole time. We had 4 closings last week, and we also sold 3 properties. And during that time period, I was no help whatsoever except for to just be the guiding hand. I literally had no strength to text. So then I started talking to people on the phone, and then I lost my voice. So it was a long week, but we did have a busy week, and I think things are looking up for everybody.
Good. Kyle, let's hear what you got on the stats this week, please.
So in Fishers, last week we had a huge uptick in listings in Fishers, and I think it's come down a little bit more to what we usually see. We had 53 go on the market last week. 23 of them are still active, and 30 of them of those pended. There's still plenty more on the market out there. Maybe last week it was 77 total were still on the market. And it's interesting, the price range in Fishers is 195 all the way up to 2.1 million, right? And I think that's one of the reasons that has become so desirable, outside of just the infrastructure and all the commercial and commute, all of those things. There's a wide variety of price range in Fishers, ironically enough, whereas in Carmel, it can be a little bit tighter window, so to speak.
Right.
And so it's just been really interesting to watch that city grow. And then in Noblesville, we had 43 go on the market, which is a little bit more normal for Noblesville as well.
Absolutely.
And 19 of those are still active, so 24 of those pended. So, but, to the point where we're talking about interest rates and all these things, everybody was panicked, right? Like, to go back to what we were talking about, and it's not happening. Like, what we thought would happen is happening, but it's happening slightly, buyers have become a little bit more patient, right? A little bit quicker than we thought. We're getting FHAs under contract, VAs under contract. We're getting seller concessions a little bit on certain properties. Some of the things that were kind of unheard of back in March are kind of happening again. And I think it's really interesting. Everybody thought rates would be way higher than they are right now. And it just hasn't gone up that significant like we originally thought. And so I think everybody is just, kind of in this holding pattern of anticipation when really, like, this would be the time to act, quite honestly, especially the next 2 weeks. As an agent myself, I'm sitting here thinking we got Memorial Day weekend this weekend.
Absolutely.
We got schools getting out, a lot of summer vacations start. If you're a buyer, next 2 weeks are actually really good hunting ground, quite honestly, because part of your competition is going to be gone with other obligations, right? And I just think it's always about, like, just talking to somebody who's in it enough to. You can't just look at the market. You also have to look at human behavior and see how people anticipate, and off of trends year in and year out, like where we kind of see some lulls in the heated market. And there just absolutely are, if you know what you're looking at.
What I think too is if you were thinking of back in the day when we would talk about the cyclical market with schools coming back online, already talking about that. They aren't even out yet, but the first week of August. So most people, the families want to move at this time. So everybody's looking to try to get a pending and sold and moved in time for school to start. And that would mean right now, because if we're looking at a 30 to 45 day close, if you put a house under contract, June 1st, you're moving in the middle of July and you're ready for school to start. So these next few weeks are really coming down to the point where you're going to not be into your house if you don't have your home within the next 2 to 3 to 4 weeks. You'll be moving after school starts. And that was
Right.
always something everybody always talked about.
Which
Yep.
is, we talk about how do you write the best offers, but, in the next couple weeks to month, a contingent offer, I mean, that house is going to receive so much attention, right? So, like, even a contingent offer, I wouldn't be worried about. I mean, there's going to be so much volume out in the market right now. I think people who are afraid to do that shouldn't be afraid to do that, because I think
Right.
people understand what the market is doing right now.
Exactly. And with the interest rates going up, as I thought by now we'd be tapping on the door at 6. The banks are 5.5, 5.65. Some banks are even at 5.75 this morning that I looked. The nice thing is that the broker world, they're almost a half a point less. Okay, I mean, we got Greg Evans sitting here with PRMG Mortgage, and we're talking about interest rates, Greg. And, we look at the board, and Chase Bank and Bank of America, they're at 5.5, 5.65. I look at them every day, and it looks like, Greg, you could probably sell a rate anywhere from 5.125 to 5.25. Could you go any less than that, Greg? Or
There are a few of us that can go a little under 5% today, which there's been some improvement in the rates this week, which always gives buyers more buying power and
Exactly.
payment relief. So both of those never hurt.
let me ask you this, Greg. When it comes to people wanting to buy a home, and when they call you up and say, "Hey, can I get a 4.5% rate?" What do you tell them?
You're going to get an ARM if you want 4.5%.
And that's a 5-year arm.
That's a 5-1 ARM.
5-1 arm. That's fixed for 5 years, amortized over a 30-year term, correct?
That is correct.
Are you
There's
selling any 7s?
There's a few 7s out there. They're about 0.25% higher.
Yeah.
But it's still less than a 30-year fixed.
Oh yeah, I mean, you're still qualifying, and Shelly and Kyle, do you have? I don't know how much you get into the rate part with your clients, but do they ever say anything about ARMs? Is that even coming on the conversations right now, or do they not know enough about them to bring them up?
A little bit of both. So part of it's education. Part of it is honestly stigma from 2008, unfortunately, and so it's on us to kind of educate them and put them in contact with somebody like Greg, so they can speak and educate this person so that they can understand what the actual loan product is. But I think it's just the conversations we're having. We were kind of discussing it a little bit before we started. People were afraid of these rates going up, and honestly, like, I'm more concerned about what I'm paying over list, because I can absorb the rate hit
Absolutely.
way more than I can absorb that $80K over list.
Yeah, people don't understand that.
That $80K, if you break that down into a monthly payment, like, it would save you that, that it would bridge the gap on that extra point difference for like 15 years or something.
Plus,
like
the
that,
other thing
right?
too,
So,
if they want to break down that gap in the beginning, they need to get with Greg Evans and just say, hey, let's jump on a 5-1 ARM. Okay, I mean, that could save a lot of money right there. But if you got a 30-year fix today on a $500,000 home with 20% down, you're talking a mortgage payment, principal and interest, and property taxes. I'm using it at 1%. You're talking a principal and interest and mortgage payment around $2,271, and that's a 5.5%. You get to a adjustable rate mortgage ARM. You're going to save a little bit of money. You're going to get down to $2,110.
well, it's interesting too, because with rates where they were, people hear that number and they think, I'm getting robbed or whatever it may be. When I bought my house 7 years ago, that's where we're at, and I thought I was getting a deal at the time, but
Absolutely.
Everything changed so much in those 2 years. Like, this is generally where we are, even this is pretty low. It's just not as low as it was for the past 2 years, and so people think they missed out or they shouldn't do something. If you're educated on it and know what you're getting into, this is still generally historically where you would actually be really, really happy with, quite honestly. It's just more about the conversation. Now the inflation piece, I think that's the actual bigger piece than it is the rate piece, right? Because you got to absorb all these other costs that have gone up. But I don't know. I just think it's really interesting as we talk about it, and I think there's a lot of misnomers on it. And I think people think that agents or loan officers are out here trying to sell people. I have nothing to do with selling. I'm just here to educate, and be an advocate for somebody and not let somebody do something to put them in a bad position.
Well, I think that's the right thing, because if you get a good agent that wants to help people, the house deal is going to come together without any pressure. And if you get a good loan officer that wants to talk to them about their goals and what kind of mortgage they want, the whole deal is going to come together a little bit easier. And people do need to be educated on fixed rate versus ARMs. And Greg, back to you. I'm sure you do a lot of comparisons between a fixed rate mortgage and an adjustable rate mortgage, because somebody can refinance if they get a 5-year ARM within 5 years.
They can refinance quickly if mortgage rates go lower. And it's when you're talking a half a point difference in rate, that's a big difference,
Especially on a 500,000 or more. But the question I have for you, Greg, if somebody wants to refinance right now, let's say they want to do a debt consolidation loan, pay off some of the debts they have in furnishings and stuff like that on their home that they bought when they bought a home 2 years ago at 500,000. They want to put it all together. We're starting to see some of that come aboard. Okay,
every day.
It's unbelievable. Guys are giving up 2.75% rates. They're going to a 4.5% rate, to even a 5.25% rate, and they're putting all their debts together. And to make a long story short, they've consolidated everything, and they've used their new equity to keep themselves out of PMI, and they actually have a lower monthly payment compared to what they were paying on all these other debts. And the real estate values are there to help sustain the loan. You know what I'm saying?
Well, they've got to, keep everything paid off once we do pay it off.
Yeah, I understand that, but Greg, everybody's not like you. Okay.
The interesting thing that's coming up too, Lakefront Property season, and I know Shelly's over
Shelly.
there. I mean, if you want to talk to somebody about Lakefront Property, I mean, it's a good time right now. I know that much. It's about to hit.
Shelly,
voting
Sweetwater
season.
Lake has got to be on fire right now.
You know, this weather has not made it very good lake season yet, but this is the big weekend, and everybody will be out and enjoying it. And yeah, Sweetwater and Cordray is my specialty down in Nineveh, and they were hit with some really bad storms last week.
Yes, they were.
So they're still cleaning up. Unfortunately, there's been a lot of destruction down there, and just a lot of trees down, and so they're cleaning up. So hopefully this weekend everybody can have fun. But yes, it is lake season, and it's time to start thinking about that if you're interested in lake properties. It's a beautiful area down there, and the homes down there are available. And
What do they start at, Shelly? I remember we talked about this on a previous show, but can you get anything down there for $500,000?
Yes, you can. You know, you always want to talk about what somebody's looking for in a lake property. So for people who are looking for lakefront properties, normally they're looking for views or swimmability and all of that. So we always say back in the cove a little bit farther. That's when the prices go down. The farther out you get into the open water where you can see nice views, that they go up higher. So starting back in the cove, you can start around $350 or so, I think, is where be an average. And then
If somebody were to buy a home down there, how far of a drive from Carmel, Indiana, or Fishers does it take to get to Sweetwater?
Carmel is about an hour and 10 minutes, 15 minutes
not bad.
without a bad traffic. So you don't want to leave at 4 o'clock on a Friday, though.
Absolutely.
So yeah, we have a lot of people that come from Chicago and Cincinnati and Louisville as well, because it's a nice lakefront property place to have your second home and get out of the
affordable.
city. And very affordable. Also, it's been on Lakefront Bargain Hunt a couple of times. I was on that show as well, and that really brought it some regional people coming from different areas around the region. So we were having just people in our little bit area, you know, Indiana or Illinois or Ohio, and now they're coming from more towards even the East Coast.
Okay, we're going to wrap up this show, but what do buyers need to do if they got to buy a home in the next 2 or 3 weeks? What they got to be realistic on these prices and just make a solid offer. I mean, a crappy offer never gets a home bought, right? At the end of the day, Kyle.
No, I mean, really, you just have to have had a conversation of what we're willing to do, right? And when you see the house, you just need to be willing to do that, right? And if not, then the 2 to 3 weeks needs to be, you know, there's always something you can look at. So either
Right.
the offer needs to be looked at or the timeline needs to be looked at, because regardless, you can get it done. But it's really hard to be limited in both in this current market. But if you have flexibility or one and the other, you can absolutely get a house. You just can.
Well, and they just need to know that we've had those conversations before we ever look at a house, to just really get the information about that specific neighborhood or the town you're in. We do comps and stuff. Usually, a lot of times beforehand, we have to have the conversation of, okay, what's the average list to sale price that's happening in this neighborhood? And if we go in and we look at, again, I keep saying 10 to 15% above list. The buyer needs to be educated with that before they even look at a home, to understand that the list price really doesn't mean anything. It's something going to be a lot higher than that, more than likely. And if they're not willing to do that, or can't stomach that, or just can't fathom the fact that they're going to put another $40,000 or $50,000 down, we're trying to show them the numbers, and we do this every day, and it is true. We're not trying to have them write high offers for the fun of it. Unfortunately, it's just the way everybody's competing. And then having other parts of the offer as well that you have to have in there is your inspection. You'll have to have inspections, have to say how much you're not going to ask the seller to do. Appraisal gap has to be in there as well still. So all of that, it's not just a standard, here's our offer. And also, buyers really need to understand there will be no counters. So the buyers that make offers and say, well, we'll wait and see what the seller says, the counters are not really done anymore in today's market.
Because somebody else bought the home.
Yeah, because
Put your best foot forward.
you have to. And when we say what's your best, you just really understand that we're not trying to force you into a position to do anything hastily or spend too much money. We're trying to help you. If this is a house you've told us you'd really love to move into with your family,
You gotta jump on
We're trying
it.
to tell you how to do it the best way, and have that conversation up front, because once you really find that house, it moves fast.
Great.
Well, I will say too, real quick.
sorry.
The other thing that's encouraging to see is I feel like I see inspections coming back.
Oh, I'm sure you are.
But more for educational purposes or very limited on what they
Softening
will
of the
request.
market a little bit.
I'm just glad to see him come back because, when you represent a buyer, I want somebody to know what they're buying. I have also seen it, and we talked about this week, I've been seeing sellers do pre-listing inspections. So if they anticipate no inspections, they're putting it up out front so people already know what they're getting into. So I've seen a little bit better cohesiveness of a little bit of give from everybody now.
Yeah, and I think sellers too. That's just only helping everybody to know because
100%.
as a seller, I always say you don't go crawling around your attic or your crawl space very often, and you don't get in your electrical panel, and you don't know what you're looking for. And if you don't know, then you don't know. And when the buyer comes in and tells you something that you didn't know, then everybody's very surprised. So as a seller, if you can prepare your home and say, here's our inspection we did go through, we found everything that we think might be of interest, we've actually fixed these items, then a buyer is ready to go with an offer of as is and can say, I'm not going to do an inspection. And that's just, working together, buyers and sellers together to make everything a little bit easier.
Okay. Greg, quick question. If somebody wanted to get a rate quote from you in writing and talk to you about getting pre-approved, tell them how they can get a hold of you, please.
They can reach me by phone or text, 317-590-6546.
And what's the name of your company?
PRMG.
Thank you, sir. And Kyle, if they want to get a hold of you, talk to you about a home, listing their home in Broad Ripple, Mass Avenue, or in Kentucky. I'm just joking. I do like Kentucky.
I would
though.
actually assist with that somehow.
Okay, but how can they get a hold of you? You're with FC Tucker.
Right.
Give them the lowdown.
So in Morris Property Group, call or text anytime, 317-649-5122.
And Shelly with EXP in Carmel, Indiana, and the Shelly Walters Group. How can they get a hold of you?
You guys can reach me on my cell phone anytime, 317-201-2601.
Everybody, thank you for listening to the show today. And Shelly, take us out.
You guys have a great day and a great week.
Thank you, everybody.
Hey everyone, Holly here. Thanks for listening to the Indianapolis Real Estate Market Weekly Update. Need a professional real estate agent? Reach out to one of our realtors on the podcast. Shelly Walters with EXP Realty, Greg Cooper with Compass Real Estate, Kyle Morris with FC Tucker, and Justin Griffith with Keller Williams. This podcast is sponsored by America's Best Mortgage by PRMG, 317-214-6720, and ExecutivePortfolio.com, the #1 real estate magazine in Greater Indianapolis.